Hello everyone, welcome to our channel. My name is Diljit and today we're gonna analyze Nifty and Bank Nifty. We'll identify key levels, we'll identify which kind of a direction we can see, and eventually we'll try to identify a strategy which is suitable for this week's coming expiry. So as you know, today is Thursday and today's Nifty's expiry. As you can see, it is closing somewhere a little negative, almost like 0.35%, and we are seeing a short built up. But let us just analyze further on. But before starting, if you're new here in Quantsap, you can sign up Quantsap. I'll put up the link in the description. As you'll sign up, you can unlock 20 plus free tools which will help you in your options trading journey. Now, if you are stuck, if you want to understand what Quantsap is providing, what kind of strategies and tools you can use and do options trading, you can come here in the learn section and you can see the video library and you can check out the multiple videos and strategies of how you can do options trading with the help of Quantsap. Now, further, if you have any doubts or queries, so you can come here in the support section and you can write us or you can WhatsApp us and we'll try to help you out regarding the same. Okay, so this was it for the intro. Now let us just start the topic and understand that how you can do, how we can identify Nifty's levels and what all points we should cover. So initially what we need to see is the, let's just suppose we'll see the built up of the Nifty. Okay, so we'll go on the scan and we see the OI historical built up of Nifty. So as you can see, Nifty is already deployed. So as you can see that it is somewhere in a sideways trend. Okay, so in my previous videos, as I defined you, that we have seen almost a good momentum on the upper side, almost a 2% from the starting of the month. Okay, so from the beginning of the month, just a second. So as you can see, this is 3rd December. Okay, I believe so. Yeah. So from 2nd December, Nifty has given you a good bull run. Okay. So almost it has given you almost 2% range it has given you. And now as you can see, it is stagnated in a sideways market. So now what we can expect from the coming market is that either you will see a bullish momentum again, okay, or you can see a little sideways market more of this, because in this month's beginning only we have seen the first week it has given you the 2% return already. So somewhere again the market needs to stall a little. So somewhere we are seeing a sideways market, but again if we are getting good news and if we are having a supportive buyers and sellers kind of a built up, then you can see a good momentum in Nifty. Other than that, we are seeing a sideways market only. Now let us just check out the IV of Nifty. Okay, so we'll go on the IV. So if we see the current IV of Nifty, I'll just zoom in a little. So as you can see, we are on the IV chart. So you can see the current IV conditions. If we are talking about the current IV conditions, we can see that somewhere Nifty's IV is somewhere at a lower point. Okay. So as we can see here that Nifty's IV, if we talk about, you can see the IV has been falling from past initial of the month. As you can see here also from 1369, we can see almost till 12.33. So IV is gradually decreasing. Okay, so we are seeing the fall in the IV, and that is indicating us that the premiums are getting cheaper day by day. But it is also indicating that somewhere Nifty's demand is decreasing. Okay, so first thing what we are seeing is the demand is decreasing. Okay. Okay, so if the demand is decreasing, that means the IV will also decrease, and with that we'll see the decrease in premiums. Okay, so when we are seeing a decrease in the premiums, you can go for option buying here. Okay, so for coming week you can do option buying because the premiums are cheap. So you can do option buying on the suggestion on the basis of the IV. So these are the parameters which we see on the IV, IVP and IVR. So you can see both are at a lower point. Okay, so IVR is somewhere around 14. As you can see, the range also 27 is the highest IV observed, 9 is the lowest IV observed, currently it's around 12. So you can see it is very near to the lowest point. So whenever it's near the lowest point, you can see the IVP and IVR are below 30. So whenever these two parameters are below 30, you can go for option buying. Okay, so it is suggested you can go for option buying because you are having premiums cheap. So you can simply go with naked options, or you can simply go with a straddle, and you can gain a little insight so that because see, IV is having a mean reverting nature. So you can see the IV is making highs, it comes to low. Whenever it makes a low, again it comes to the median. Again it makes a high. So IV is always in a mean reverting kind of a nature, that it always reverts to a specific mean. So you can identify the mean. If you want, you can take the data from here in the table. Okay, so you can take the tabular data from here, and you can drop it into an Excel sheet, and you can identify a particular mean, and from that mean you can initiate your trades. That, let's just suppose the mean is around 13, let's just say. Okay, so whenever it is crossing above 13, you can go and buy straddle. Okay, similarly, whenever it's going below 13, just the opposite, you're gonna short straddle here whenever it's going above, and you're gonna buy straddle here when it is below. Okay, so this way you can basically create a ideology that in Nifty, if you want to trade, you can simply go non-directional in Nifty, and you can just buy options, both call option and put option, only on the basis that the IV is somewhere at a lower point. Okay, so that was the IV analysis. So the conclusions what we can take from IV is that you can do option buying, or you can go for buying of straddles because the IV is low. So if you're going non-directional, you can trade on that, and if you're on a directional side, you can go with naked option buying because the premiums are somewhere comparatively cheap. Okay, so now we'll identify some key levels on the basis of the open interest. Okay, so now we have opened the open interest, and now we'll analyze some key levels in Nifty. Okay, so what if we can see the resistance somewhere is created around 25,000. You can see almost 47 lakh positions being opened here. Okay, so 25,000 level is acting as a crucial resistance. Okay, if we see the positions here, you can see 47 lakhs 13,000 positions, and freshly made 20 lakh positions which are added on today. So this is acting as the crucial resistance which we can see in the coming week. And if we talk about support, now you can see 24,600 also acting as a crucial support. Okay, now the market is, whenever the price is going below 24,600, the market is rejecting it. So you can see the support, crucial support, you can see around 24,600. What you can see that 25 lakh positions being made, and fresh 12 lakh positions what you can see being made in the Nifty support level is 24,600. We can see 24,500 is also acting as a good support. It is almost around same positions which we can see at 24,600 level. Same we can see at 24,500 levels. So you can see your put positions if you see. So 25 lakh positions here and 27 lakh positions here. So these two are the key supports. Okay, so key support levels are around 24,600, 24,500. So these are the key support levels which is identified by the open interest levels. And the resistance level, if we talk about, so you can see 24,700 is still acting as a good resistance, almost 32 lakh positions. Okay, other than that, if we talk about, so the next level will be after 24,700, it will be the 25,000 level. So 25,000 level is the far resistance. Okay, and this is the near resistance. The closest resistance is this level. So these are the key important resistance levels. So if the Nifty is breaking 24,700 level, we can see a momentum till 25,000. Again, similarly, if we see a support breakdown from 24,600, we'll see Nifty to be dropping down to 24,500 to 24,450 levels. So this way you can basically identify a range, and you can create a straddle for yourself. Okay, so simply what you can do is you can identify this range, and you can create a particular triangle, so that basically eventually when the Nifty will be expiring between this range, you can make a money out of it. Okay, now let us do a little chart analysis. Okay, so if I go on the analyze chart order trade, okay, so this is Nifty's chart. I'll change it to 1 hour chart. Okay, so as you can see, I've already marked the key support zones which were acting as a support zone. You can see Nifty now also is acting or making a support at those levels only, and the key resistance also predetermined that market is continuously taking resistance here. So the key resistance zones are already predetermined. So you can see somewhere we are seeing around 24,600 or 650 levels as the support area. Okay, just a second, I'll just make it clear for you. So as you can see here, okay, so if we see that Nifty, when it came to this support level first time, as I told that, in the initial month, starting of the month from 2nd to 5th, we had seen a good momentum, almost 2% returns we had made here. So after the 2%, you can see Nifty is in a oscillating trend. So we are seeing it is in a sideways trend. Okay, so sideways. So we are seeing a sideways market here. Okay, so market has given you a range bound activity. So resistance support, again resistance support, again resistance support, and today also it gave a minor this and at the support. So it is still in an oscillating trend. So until and unless it gives you a breakdown here, or if it gives you a good breakout on the upper level, and you are seeing good unwinding in the open interest. Okay, so this is an indication, and OI unwinding you need to see on both side. Okay, so unwinding also you need to see, though I should fall, and then only you select your direction. If on the upper side you're seeing call side unwinding, you can take trades on the upper side. If you see put side unwinding on the lower side, so you can take on the put trades, or else you can simply go with a straddle or a strangle. You need to short the straddle or strangle between these ranges. So 200-point range you can take, and you can make a straddle or a strangle. Okay, so simply if Nifty is an oscillating trend, simply keep on creating this kind of a strategy, because again, until and unless you are seeing a breakout, no kind of a trade is still initiating. So even if you want to initiate, if you want to go on a directional, or if you want to do a range bound trading, what you can do is you can identify this key resistance level for yourself, and you can short at the resistance. Okay, so whenever it's coming here you short, and whenever it's coming here you buy or you long. Okay, so this way also you can do a range bound trading if you are an option buyer. Okay, so in option buying, you if you want to do a trade, so you can do in this case. Okay, so you can do range bound trading, and somewhat you can make few bucks out of it. So this was it in the chart analysis. Again, as I said, it's in an oscillating trend, so we're not seeing any kind of a big momentum here. Okay, so until and unless we are seeing a good momentum or a good breakdown of either side, till then you can simply hold or you can initiate a straddle or a strangle. Now what we'll do is we'll just try to simply create a straddle or a strangle. So I'll go on the trading, and I'll go on the option writer. Okay, so as you can see, Nifty is already added. So what we'll do is we'll just identify the upper bound and the lower bound here. Okay, so this is a day chart. Again, as we can see, Nifty, just a second. So we can identify that the range should be like around 24,500 to 24,800. We can identify such a range, that 24,800, 850 can be a good range. So this is the range which you can identify. Okay, so you can hold it till the next week. Okay, just a second. Right. So this can be your range identification. Okay, so if you are holding it for 7 days, as you can see, okay, sorry. So you can hold it for 7 days. So sorry, just a second. Okay, so you can initiate a trade like this. Now if you see here that we are the gap up gap down risk is minimal. Okay, and as we can see the writing attractiveness here. Okay, IVP and IVR are a little dicey, because as we discussed, the IVs are low, but still as you can see the theta decay is also not in our favor, because we are in a new week. Okay, so initially obviously you'll face this issue, but again when if you initiate this trade, okay, you are not having a gamma risk, and a trend score is also mildly in your favor. So as you can see, three out of five are in our favor mildly, and two are risky. So again, in this both parameter, you can take one. IVP is giving you good indication. So with that, you can see. Just a second, I'll just clear this. So with that, you can see, there is a strangle suggested to you. that in this range, if you sell this kind of a triangle, okay, you are having a green signal is indicating you that you can take a trade. Okay, so you can initiate a strategy like this. You can initiate a triangle here, and it is giving you a green indication. That means somewhere this particular trade is having a chances of making a profit. Now your target and stop loss, if we see that your target is around 6,700 and your stop loss is around 3,000. So almost like a 1:2 risk to reward we are seeing. So break even points are already identified to you. So you can go forward with this kind of a trade. Now again, you can see the selling is a little risky game. Okay, so if you are not wanting to risk a lot, so what you can do is you can simply add hedge. Okay, so when you add hedge, basically you simply what we'll do is we'll just go and sell a little higher. So let's just suppose 24,900. Similarly here we'll just go on 24,550. Okay, so this will be your PNL, I believe. Okay, so here what we are seeing is we are seeing a good risk to reward of almost like 1:2. Okay, so simply what you can do is, as you can see, your loss is around 726, your profit is around 1800. Okay, and your risk to reward is almost around 2.4. Your break even points are predetermined, and as you can see, you are hedged on both of the sides. So now this kind of a strategy, you are having a good risk to reward, you are not having an unlimited risk profile. So you can go forward with this kind of a strategy. You can multiply your sizing with your lot size, and if you want, you can directly execute trades also with the quants app if you are having tied up with our brokers, right? So this way, basically, you can identify the key levels that the resistance and support of Nifty. If you are an option buyer, you can trade on the range bound trading, and if you are an option seller and if you want to identify such ranges, you can use the option writer. As you can see, we have identified and we have created a strategy, right? So I hope you got the content. Thank you so much guys for watching. Do like, share and subscribe for more such videos.